and welcome. You're watching Business Today Television. I'm Sakshi Batra and this is Market Today, a show where we'll help you understand the closing action on the D Street. Well, the sell-off has intensified since morning. We are now seeing sharp cuts across the board, be it the benchmark indices, the Nifty Bank or the broader market indices as well. There's a 1.7% cut on the Nifty. It's down by 373 points, 22,170 being seen on the Nifty. You're also looking at sharp cuts across the board on the mid and the small caps as well, where the cuts have been further intensified. You can talk about the Nifty Bank is slightly better off. You can see about a 0.6% uptick, 0.6% kind of a downtick here, but it's considerably improved from the day's low point. So 330 points of a decline for the Nifty Bank. But where you need to see is how the broader markets are really looking at. Very, very weak at this point in time, largely led by sharp sectoral downticks led by IT sector, for instance. Small caps are down by 2.8%, 14,731. You can also look at the mid caps that have also dropped by over 1,400 points in the intraday levels, now down by 2.6 odd percent. In fact, in the sell-off, the investors have also lost 10 lakh crore rupees in just today's trading session. Look at the kind of sectoral moves you're seeing. IT down by over 4%, autos down by about 4% as well. Media stocks are down by over 3%. All the sectors are actually down and out in trades today. And there is a complete bearish momentum that you're seeing across the street. This is the first day of the March F&O series. Of course, as of yesterday, what we have seen is that till the February series, we've ended 5 months of lows as far as the Nifty is concerned. That's also broken the 28-year-old record as far as the market sell-off is concerned. Not, from after 1996, we've actually not seen a 5-month of consecutive sell-off period. But as every series began, the big question was, will this be the series when we will see some relief rally or not? Starting off, March F&O series has definitely not been on a positive zone, but let's try and understand the key factors, why the markets are actually losing so much ground, how much more downside from here, what should you be really doing with your stock market investments at this point in time. Let's welcome our guest on board. We have Prashant Tapse from Mehta Equities joining in to help us understand what has really gone wrong with the markets as we began on a bearish note and the intensifying sell-off has only worsened. Prashant, welcome. Good to have you with us yet again. I'm sure your phone must not have stopped ringing from morning with your clients calling in, helter-skelter, panic-stricken at this point in time, wanting to know what exactly is going wrong with the stock markets. You tell us what are the top 2 or 3 reasons why you believe that such a sharp sell-off has taken place today, and what does that indicate? Are we in for some more worse correction from here?
I think one should go back at least 6 months back when markets were trading at all-time high. From there, I think things started going bad with respect to Q2 earnings as well as Q3 earnings. So earnings triggered a lot of overvaluation in the markets in terms of large cap as well as the broader market in mid cap and small cap. So that was the first trigger for Indian markets where FIs found now it's the time to sell off. Then again in January, obviously Trump came in place again. He started talking about America first, make in America and all. I think that was one again where we had a good experience in the last term in 2017 to 2021, where he was almost in a very, very harsh shape in terms of tariffing all the countries like China, Mexico, and Canada. So at that point of time, again, we were in the COVID times, and obviously that was not a right time for him to be harsh on the other countries. But now, obviously, he's in the right place. Obviously, second term has been the a great term for him. He has won very strongly in the US market. I think now because of tariff war, things went very bad. Obviously, that triggered FIs saying that their own home country can give them better yield rather than getting allocated in the other sectors like India, China, and other countries. So I think that again, Trump triggered FIs to take money back to their own countries, but for risk-free yield which they are enjoying right now. So those are the reasons why markets went very much wrong in last 3 months.
Yeah, absolutely. So like I was saying, Prashant, I think look at the Nifty and the Sensex. They're down by about 15% from their peak that we had seen in September. And look at the broader markets. Mid and small caps have entered the bear market territory. 21% loss for the mid caps from the peak, 24% of a cut for the small caps from their peak as well. I mean, looking at such a sharp fall, what do you make of the kind of current strategy that investors should have? A lot of people are contemplating, should they be looking at bargain hunting, bottom fishing at this point in time? Because sooner or later, sometime we would hope that the markets will return to their glory days. Or do you think there needs to be some more wait and watch scenario to play out? We need to see if there is some more correction to flow on both the large caps as well as the broader markets.
So correction, I think the pain will continue because the tariff war, headlines are still continuing. 2 days back, we were not knowing about March 4 as a date where Mexico, Canada will start getting 25% tariff for their businesses. Again, China, again the date came at March 4. So we don't have any clear indication which other countries will be penalized with tariff going forward for next 1.5 months. So obviously up to May 2nd, I think he has already declared the reciprocal taxes will be applied for all the countries whoever are importing for who are they exporting to the US. So I think till that date, markets will continue to be in the same pain. Obviously, where is the bottom? It's the biggest big billion-dollar question for everyone. Obviously, levels are not to be watched because the seller is not looking at levels and selling in the market. He's just looking at the liquidity. Wherever he's finding high liquidity, the FIs are continuously, relentlessly selling there in the Indian market. So one has to wait and watch. A long-term portfolio obviously is in the loss of 20% to 40% as of now. But to average or to exit, we are not able to timing right now at this point of time. We need to wait and watch, then take a right decision when market settles.
What downside do you expect from here? I mean, 15% of the benchmark is already here. Do you see the Nifty entering a bear market? 5%, is that ruled out or can that happen?
There are very high possibilities. I think 21,500 is the very scariest support which I am looking at. If it closes below this again, 20,800 would be the level where I think we will be going into bear markets again.
Okay, fair point. And anything that you'd like to suggest as far as the FII sell-off is concerned? When do you think that will start to get abated? When will FIIs return?
See, FIs will come back to India once the valuation are very much cheaper. I think still India is the second expensive markets in the world when compared to the US again. So China is looking very cheapest at this point of time. So lot of money is going towards US back to their home country, and some money is going towards China also. So I think it will take its own time to say when will Indian market get settled, and then when will US FIS will come back to India. Obviously, Q1 earnings should be highly watched. Until unless we don't get a growth in earnings, then only the FIS can come back.
Are there any safe havens, Prashant, that you're looking at in the current market? Have you already started to nibble into this weakness in the market? What are your points of purchase at this point?
Your voice is breaking. I am not able to listen.
So, Prashant, wanting to understand where exactly are you finding safe havens in the market?
Okay, understood. So I think sectors like healthcare, like Apollo Hospitals, Max Healthcare, Narayan Rudalaya, these are these sectors where I think they are very much depending on the domestic economy as well as the domestic healthcare industry. So I think those sectors will see lesser pressure when it compared to IT, pharma, or automobiles. So this sector can be highly watched. Even railway as a sector, I think with respect to last 3 months correction, railway as a sector will also looks like a safe haven with a limited downside from the current levels. Obviously, two questions: earning upgrade as well as execution of the order book which they have in the railway segment. Those are the two questions. If they answer on or before their Q4 earnings, I think the healthcare, domestic healthcare, and railway can be a safe sectors to be looked for investments.
Fair point. Okay, what we do, Prashant, is we take a very quick break, and when we return, we're going to be focusing on some more stocks and sectors that you can focus on. Stay tuned, viewers. Welcome back. You're watching Market Today on Business Today Television. We have Prashant Tapsi with us. Prashant, so we are actually looking at, breakdowns across the board, sell-offs across the board as well. What is it that you are advising SIP investors at this point in time, the mutual fund investors? Why I'm asking this is because today there's a very interesting ad that all of us have watched. Sachin Tendulkar advising all the mutual fund investors as well. We know that he's a master blaster of cricket. He's the god of cricket. And when the god of cricket also advises on investments, people do listen. Now, there are a lot of fears amongst, people's portfolios getting deep into the red. And there comes Sachin Tendulkar, calming the nerves, telling people that even his portfolio is down in the red. But markets do face a lot of these cycles, and in the end, one definitely has to continue to believe in the long-term story. What do you have to say? Did you watch that ad?
I think yes, obviously, thanks to Sachin Tendulkar, he started this ad in the right time in the market. But obviously, even I am getting a lot of questions and a lot of queries from my investors, friends, families from every nook and corner of this world. So they are asking me what went wrong with my portfolio. Yeah, it is down by 20%. Markets are down by 20%. What should I do now? I said simply, patience is the only no investments you have to do it right now. Or else you can, if there is a capital to double your SIP for a very shorter period of time, at least 6 months to one year, you need to try to double your SIPs at this point of time. So at least the averaging cost will benefit you in the long run. Obviously, when you invest in SIP, it's a long 3-5 year story. But obviously, don't get panicked in the last 6 months. Obviously, that is the time you will see every 5 years. This is a cycle in the market. So I'm advising them to double your SIPs if there is a chance. Otherwise, have patience, have discipline in the markets. Obviously, that will pay off in the long run.
Okay, have patience, double down your SIPs. That will definitely reward you in the long run. Okay, let's look at the market sentiment yet again. Of course, you're seeing a sea of red, an ocean of red across the board. The Nifty Next 50, Nifty 500 basket 2% lower, 3% cuts for mid caps, small caps also. India VIX is up by 4.8%. Across the board, you do see a lot of cuts that are coming in. Let's actually look at the Nifty 50 names to see how some of the stocks are really looking at this point in time again. So we are seeing most of the stocks still reeling under pressure. Remember, in the morning, there were just about a handful of stocks that were up. Today, HDFC Bank has taken that lead on the higher side. You have Shriram Finance, Coal India, Trent, Hindalco. Some of these stocks bucking the trend in an otherwise really, really weak market. Prashant, anything to say as far as the large cap banks are concerned? What would you say on the likes of HDFC?
I think except HDFC, every other private banks are down by at least 2 to 5% as on date. I think it's a high liquidity counter for FIs to sell off. Obviously, I don't know why HDFC Bank is trying to manage the whole index, but I think FIs are trying to manage the index overall, and I think selling is there in the other private banks, which the stocks are already down. So overall, high liquidity place, FIs are pushing a lot of selling pressure today.
Okay, fair point. Let's also look at some of the other pockets. IT has been in deep trouble of late in the recent sell-off that has just come in the last few trading sessions. IT has been really battered, Prashant. How are you looking at this space?
I think it was expected again the way how the bigger companies like Accenture or Cognizant, they are getting saying that the spending of IT would be very much low going forward, despite how Trump is acting to his own country. So that the headlines have triggered overall Indian markets, and they have seen a lot of deep trouble in last 3-4 days. So overall, I think from index level, 35,000 can be a level to watch for Nifty in IT.
Okay, fair point. So that's as far as the IT is concerned. Let's in fact look at the broader markets now, the Nifty 500 baskets, to see where the pain point is intensifying at this point in time. Well, you also have some stocks that are actually doing well in the otherwise weak setup in the Nifty 500. You have Home First Finance, that's up what, 10%, JB Chemicals Pharma, Craftsman Automation, Suven Pharma, 5-star. These are the stocks that are doing well in an otherwise really, really weak market. 5-star Finance. Some of these NBFCs are doing well, but where the pain point is escalating, you can actually see some of the stocks like and HDFC Life and NTPC, Torrent Pharma. These are the stocks that are declining in trade. ITC for that instance, a whole host of pockets. It's a mixed trade that you're really looking at. If I have to ask you, Prashant, in the broader markets, mid and small caps, any key stocks that you would like to take the advantage of the fall today?
I think there are three, four stocks which are shortlisted. Again, Trent would be one stock. I'm waiting for a right level, at least
Yeah.
the market to settle. Trent can be one first stock one should focus more on. Again, Apollo Hospital should be the second stock which I am not focusing more on, where it has some kind of domestic economy or local business model. I think so. These are the two stocks I'm waiting for a right level to buy and start do some kind of SIP in these stocks.
Mm. Anything in the PSU stocks, Prashant? How are you looking at some of those? You did point out some recovery that could come in on the railway space, but anything in the PSU basket beyond railways?
I think from the PSU, obviously NTPC looks good for me again, considering the power as a story. Summer would be totally peak and there will be a lot of shortage in the power. So NTPC in the PSU basket looks good. On the bank side again, I think Bank of Baroda looks good at this point of time, trading very much below its one-time book value. Almost it is sitting at 0.75. So I think Bank of Baroda also looks good at this point of time. But obviously there is some kind of downside which is very limited to PSU banks. But obviously in this market, one has to have some kind of patience to see another 5-10% in the current levels. Obviously that can be a level to buy more again.
Okay, fair point. Let's also discuss auto space. Prashant, again, this has been a space which has been very volatile, seen a lot of troubles, headwinds also. I want to know about stocks like Tata Motors, for instance. I mean, the shares are set for the worst monthly losing streak in 10 years. How are you advising clients on this one and some of the other auto space stocks as well?
So Tata Motors, obviously, I was very much bullish from last 1 year, but again, the same the 40-50% correction from the top has been seen in the markets. There are multiple reasons. Again, there was some kind of inventory pressure in November, December, January. Again, later to that, again, there was a lot of pressure with respect to new launches from Hyundai and other companies in terms of competition. Obviously, I see this company can do better on a long-term basis, but not at this price. I will not recommend people to buy at this price. There will be some kind of more pressure still in the market. I think that will keep Tata Motors under pressure. I think 550, 560 can be a range, first range to look at Tata Motors and then buy more. But obviously considering 1 or 2 years as a story as a long term.
Fair point. Okay, so that's as far as the auto space is concerned. What about some of the other spaces like FMCG, for instance? Again, a very big underperformer. Disappointment right from the 1st of February. You know, there was a whole lot of expectation that this will be the space which will turn around, but it has really not stayed on course. In fact, 8, 9, 10%, it's actually underperformed the Nifty by a wide margin. Even in this kind of a weak setup, people are not really latching on to defensives like FMCG. What do you foresee is the key reason?
So reason would be obviously yes, the liquidity in the markets. Obviously, FIs are selling a lot of stocks which have high liquidity, and the FMCG has high liquidity. Obviously, people are forcing to buy this stock because of the defensive in the nature. But again, considering the selling pressure on the higher levels from the FIs, these stocks also are underperforming at this point of time. Obviously, FMCG is a story with consumption, obviously, but that would be again starting from the next financial year. Obviously, if someone want to be again safer side, I think FMCG index stocks like HUL, Tata Consumer, these stocks should be considered to buy on every dip as SIP again for considering this story for next 1 year. But again, I think downside is very limited from the current levels for these stocks.
Okay, downside is limited for such kind of stocks. Keep an eye out on that as well. Let's also discuss some of the more volatile ones. You began your conversation by talking a lot about Donald Trump tariffs, tantrums coming through. One of the key sectors that's been vulnerable is the metals pack as well, you know, with the kind of aluminium, copper news coming in for tariffs being increased on all of them. Would you still ask people to stay away from the metal pack, or could there be some respite?
Obviously, for me, metal is always a negative comment because I don't go and look at these volatile stocks which are totally depending on many other countries like China, which is a major importer as well as a major exporter. So there is a lot of dependency on other countries for pricing metal stocks as well as their valuation in Indian market. So for me, metal at this point of time, again, it's a sell, except VDEL because there is some kind of demerger story building up. So except VDEL, rest every stock is a sell stock for me.
Okay, got that. So that's as far as the metal pack is concerned. Let's also get you to understand about few other stocks. We were also discussing about the pharma and the healthcare pack. Again, you were talking about it too. So how does one go about selecting the stocks from this basket right now, Prashant? I mean, where are you more confident of reversal coming in first when the tide turns in the market?
Obviously, with respect to the index, it is almost below 20% right now. So a lot of stocks like Alchem looks good for me at this point of time. Even Laurus Lab looks good for me at this point of time. If you see Laurus Lab from last 3 4 days, it has actually outperformed the overall market as well as the Nifty Pharma as well as the Nifty IT, Nifty as an index. So Laurus Pharma looks very good for me at this point of time. Cipla also looks good for me at this point of time because lot of the negativity of tariff as well as the reciprocal effect for pharma with respect to exporting to US has been discounted. Now the only question is earnings. If earnings can be better in Q4 or Q1, that is the only one question. So I think in this, Laurus Lab looks very strong for me to buy at this point of time.
Okay, fair point. So I hope this has also helped you out as far as the pharma picks are concerned. Any other pockets that Prashant really come on top of your mind where you think we are oversold in terms of the market, and you do believe some kind of a turnaround to take place?
I I don't think any sector is still there. I think there are a lot of stocks or sectors still there is a lot of selling pressure can come. I think March would go again in a similar way how we have seen February. So another 3 to 5% of cut in every sector we'll be seeing. So oversold, I think we are ready to get those sectors in forward in going forward.
Okay, fair point. I hope this has also got you some kind of sense of how the markets are really deeply in pain at this point in time. Let's get you to also talk about some of the themes that were important to track since yesterday. Ultratech Cement. Ultratech Cement's entry into the cables and the wires segment. The sharp reaction and a knee-jerk move on the entire existing cables and wires space. Havells cracked, Polycab cracked, KEI Industries, RR Kabel. There was some improvement today, but how are you looking at this major move by a large player of cement space into the ancillaries in the real estate space as well? How would you look at it?
As soon as I understood the news about Ultratech, I think it was a over diversification strategy by Ultratech again. Going from a major cement company, company towards a wire manufacturing companies again. It's a high inventory based company, high capital intensive. Obviously, he has a good cash to manage this kind of businesses with his brand, with his network. But it is totally difficult for Ultratech network to sell wires in his own network. So selling a cement is a different strategy and selling a wire in the market is a very different strategy. I think it was a bit of wrong move, what I understand with this 1800 crore investment. But obviously, the reaction from Polycab, KEI, RR Kabel was very much drastically, in a very bad shape. I think actually it's a good opportunity for people who would like to track cable as a sector because the new capacity from Ultratech will come after 24 months and then they will start selling it. They will burn some cash with lower EBITDA and all. So I think it's a good opportunity for KEI, Polycab, and RR Cable. At least 25-30% of the fresh money, if they are not invested, should buy this stock at this point of time.
Okay, fair point. I want all of you all to also look at one more stock, and that is the capital markets related stock, Bombay Stock Exchange, BSE. There's a sharp cut today, over 10% of a drop on this one. Remember, it's been an erstwhile wealth creator, one of the top performers in the capital market stories as well. Let's discuss this space, Prashant. I mean, the likes of BSE, CDSL, we've also seen broking related stocks, AMCs. These were the pockets that actually were the highlight of investors' portfolios in just a recent, run up. But now all of these stocks are also coming under widely pressure because you're looking at the market sell-off happening. There are SIP, contributions that are slowing down. There is a closure of SIP accounts as well. How are you navigating through these moves? Do you think for those who have absolute long-term vision, this may be in fact the right time to bottom fish some of these solid stocks like BSE and CDSL?
I think yes, bottom fishing should be done, but not at this price again because there are three reasons why stocks are down today. One is
Okay.
again profit booking, obviously the way how BSE has created a wealth. So a lot of investors, maybe FIS, maybe the domestic institution, investors, they are trying to book profits because the average buying from last 3 years were around 1600 to 2000 rupees. So they are making good profits even at this point of time. So one reason again profit booking in the counter. Second, I think Q4 earnings will be little bit on a negative side. For example, for BSE, I think because the way how index volumes have been reduced from last 3 to 4 months, that will obviously have some kind of reflection in the Q4 earnings. So the way how Q3 earnings were really good for BSE, Q4 may be comparatively lower than Q3. So that can also be one reason why the prices are getting corrected. Third, again, obviously with respect to the volume which are getting deteriorated from next, at least for next 6 months, there may be very much neutral to positive, stable business in terms of BSE volumes. So I think a lot of investors may not be actively trading at this point of time. So I think that will result in a lower volume growth in BSE. So these are the things why stocks are reason for why they are down. But CDSL obviously the newer accounts are going to have a very lower growth. Every month there were like 3 to 5% growth in terms of new accounts, but I think it will be negative going forward for at least for 1 or 2 months. So that is the one reason why CDSL is down. As a SIP investors, obviously yes, these two stocks should be part of your portfolio, but again a 3 to 4 year story from current levels.
Okay. 327, we are actually looking at the market shop for the month. But anything for the new series that you'd like to highlight, Prashant, for our viewers?
I think again the same kind of scenario can build up in the market. I think the way FIS have carried forward their FNO positions looks like again a similar February series effect can be seen in the March series. Again, a 500 points to 800 points fall in the markets are being expected considering all the yesterday's FNO data. So I think we will be going negative in the markets. Again, we may not even see the current levels what markets are trading today. So we will see 500 to 800 points negative for March series. So be one is wait and watch, otherwise be seller in the market.
Okay, fair point. Well, we'll thank you then, Prashant, for being with us on the closing edition today. It's definitely been a very, very painful day to cover for the stock markets. All across, you actually see deep pain. And with that, we end this brutal month of February. The top losers on the Nifty for this month include M&M, that's declined 13.5%. Tata Motors, that's declined 13.5%. 12% decline for Ultratech Cement. That these have been the top losers for the Nifty for this month. Even for the Sensex and the Nifty, we've actually seen over a 4,300 point of a cut for the Sensex in this month so far. 1,400 point of a cut for the Nifty for this month so far. This month itself, the Nifty has crashed by 6%, viewers. That's the kind of decline that you're looking at. And right now, we are at the low point again, 22,110 on the Nifty. Look at the Nifty mid-cap. It's lost 10%, 10 to 10.8% this month. The Nifty Bank has lost slightly lesser, so almost 2.5%. It's been an outperformer in the weakness that we have seen for the markets. Small caps have lost 13%. The Nifty Small Cap 100 Index, 13% gone just in 1 month for the small cap index as well. The Realty Index has been, worst hit again. 13.5% of a loss for the real estate index. IT index is down by 12.5% as well. That's the kind of fall that you've seen in the heavy sectoral indices. CPSE, the PSU index or the PSE index, 12% to 13% of a loss is what you have already seen for these indices in this month as well. FMCG index is down by 10% in this month so far. You're also looking at, however, the gainers front, where you have actually seen some positives. I'll also mark that. You have some metal stocks like Hindalco and Tata Steel that have been up and about. Hindalco up 6% this month. Banking stocks like Axis Bank have been up by about a few points as well. We are also looking at Shriram Finance as being an outperformer, 13% it's risen this month. Bajaj Finance about 8% this month. That's the kind of move that you've seen on the gaining front, but it's really been a very negative, somber note at which we are ending the day today as well. Let's look at the final print on the Nifty. It's 3:30. Let's see where we have shut shop for the Nifty. So the Nifty is down 1.86% at 22,126 at this point in time. 418 points of a loss coming in for the Nifty today. So a sharp loss. So we are looking at The Sensex down by nearly 2%, the Nifty down by nearly 2% today, 2.5% loss for the mid-cap index, small caps down by 3%, IT down by 4.2%. That's the kind of fall that we are seeing. The Nifty down, Nifty Bank down by 1%. The declines are 2296 as against 377 advances on the NSE in terms of stock. So you can actually look at how badly the breath has been taken a hit on. So the banks are down. You see all the sectors that are actually down and out in trade. In fact, this is a 28-year-old record that has been broken. Fifth month in a row is what we have seen. The Nifty decline for the markets, something that's not been seen since 1996. Why the sell-off happened today? Largely, it has to go towards the negative cues coming in from globally as well as from Donald Trump's tariff talk that has dampened the sentiments. Second reason, relentless FII sell-off. Third reason, the continued weakness in the earnings. And of course, the fourth reason as well, that the markets have been coming under pressure because of the FII sell-off as well. So apart from this, remember, after the markets shut shop today, there's going to be another macroeconomic data. GDP figures will be released, and that will be important to understand. In case there is any kind of a positive surprise there, we could probably hope for a positive opening on Monday. But in case the number is far weaker, that could further dampen the sentiments. You cannot rule out further pain in the stock markets as well. With that, viewers, we wrap up today's trading session. It's been a painful day, but just like how all our experts throughout the course of the day have highlighted and told investors that this is not the time to panic. This is a phase. You need to go through the pain. Take a calculated action as far as your portfolios are concerned. Do not stop your SIPs. Do not stop your SIPs. In fact, if you can, double down your SIPs in this current time so that in the long run, you are getting rewards of better prices as well. With that, we wrap up. Do stay tuned. Market coverage ends here. But beyond that, you will see macroeconomic coverage start up at 4 p.m. So stay tuned with us on Business Today Television.